real estate, will provide positive cash flow most of the time, especially short-term rentals, but bleep happens,
Welcome to the Wealth Builders Podcast. We're so grateful that you join us each and every week. And you know what? This podcast has been growing thanks to all of you. And we want to encourage you to keep sharing this with friends and family. Today is going to be a really fun podcast because I've got my great friend with me, Bill Bronchick, our resident attorney.
Great to be here.
Oh, so good to have you here. I really love the information that Bill shares, and we're going to focus today on giving you a little insight into, what now? Here we are in 2025. President Trump is in place, and what can we do to just really leverage the opportunity that we have? So Bill will be sharing on that. But before we get started with that, I want to share with you a free offer that we have, and this is Billy's new booklet. It's called Financial Breakthrough, Embracing God's Plan for Abundance. And Billy wants to give this to you completely free of charge as a PDF download. So to take advantage of that, you can go to wealthbuilders.org break-through and just look at the information and the QR code that's actually below in the screen here as well. All right. So, Bill, I am really looking forward to this discussion because it's been kind of a crazy ride here since President Trump is in a good way, right?
In a good way. So yes, in a good way. And I think some of that is going to be a factor in the 2025 real estate market. The political, anytime there's uncertainty in the market, it spooks investors of all kinds, whether it's real estate, stock market, whatever. And even though we know who the president is, we don't always know from day to day what he's going to do.
Yeah,
and what his opposition is going to do to fight him in court or whatever.
Right.
So political uncertainty in some way does affect the real estate market because, like what's coming next and what are the Democrats going to do about it? And is there going to be cooperation or is there going to be fighting? And the more fighting and things, nothing gets done. And we like when nothing gets done in the government. But if we don't know what's going to happen, that's a problem for the real estate market in general.
Yeah, I agree. And I'm seeing that too. It's actually a really great time to go in and buy, at least in the areas we're looking. But one of the things, Bill, that I'd love your insight on, I know you're going to give us a few things that we can do this year to really take advantage of this opportunity, but the interest rates, the interest rates are still high. And I think this last time the Fed met, they didn't lower them.
No, they went up. They went up because people think that the Fed rate controls interest rate. It doesn't. They usually move in tandem, but the Fed is a short-term rate. The mortgage rates are based on the 10-year Treasury. So it's what investors are looking 10 years into the future, what's going to be happening, positive or negative, whether the interest rates will go up or down. So I think what happened was the Fed had cut rates 50 basis points and mortgage rates went down. And then they were expecting another big cut and the Fed didn't. So that's why mortgage rates didn't go down again. So will interest rates drop in 2025? I think they will towards the latter half.
Yeah.
But not big. We're not expecting anything, maybe 6.25 at best.
Is it because inflation is not under control yet?
Yes, there's still inflationary issues. Whatever Trump does for the economy, it's going to take a while. He can't fix the economy by executive order. If you remember back when Reagan came in after Carter, which was very similar with inflation and stagflation. It took almost 18 months for the tax cuts and other policy that Reagan did to take effect on the economy, which was a boom for many, many years, if you remember.
Yeah, I do.
And I think we'll see the same thing under Trump. His policies will be pro-economy and pro-jobs and pro-growth, but it's not going to happen overnight. So 2025, I don't see any major change. The only thing we might see, because there's a lot of positive consumer sentiment, and I think employers are looking like we're not going to get hit with taxes and regulations, so maybe we'll grow and hire more people. and that may increase wages. So if you can afford more, you're willing to pay a higher interest rate. So if your salary goes up by 10%, well, I can afford more interest payment.
That is a really good point. I wonder too, the energy. I'm not sure how much energy is impacting our economy, but that's what I'm wondering. It might cut the gas prices almost in half.
Right. So, but if gas prices go down substantially, everything that goes in the supermarket, eggs to milk, is trucked.
That's
true.
So
anything that's trucked is going to go down in price if the fuel prices go down, as well as travel or anything that relies on fossil fuels to deliver. So if fuel prices go down, then the price of goods they're moving is going to go down.
That is such a great point, and that in itself would probably help lower inflation. I mean, I'm no economist. I'm intrigued by it because I know the moves that are being made are purposeful. Back to the Fed and the interest rates. Now, is that a position that President Trump can remove the current Fed chair and replace, or is that independent?
The question is, will he? And I don't think he will. And technically, they're independent. The White House can put pressure, but they really can't control what's going on. They really can't control. Now, the other thing we have to be concerned about is spending. Now, in the short term, we cut taxes, we fund military like Trump did last time. He spent like a drunken sailor. I mean, the way he got what he wanted was he gave the Democrats everything they wanted. So he was no better with the spending really than the Democrats were. We just got something for our money.
Yes.
So, too much spending again leads to more borrowing by the government and leads to higher interest rates. So we'll see maybe this, Doge thing with Elon Musk, I don't know how much they're going to really cut. They're just going to embarrass a lot of people with stupid policies and cut here and there. But I don't see, 5 or 10% slashing off the budget, which would be awesome.
It would be awesome.
I just don't think it's going to be that much.
Maybe some movement around.
Yeah, maybe it'll be just someone's looking. I'm looking at the Congress people and the nonsense they're spending on.
Yeah, and making it public.
I don't know. I saw a press thing the other day with a bunch of Democratic women screaming and cursing at the top of their lungs to fire Elon Musk. I said, wait a minute, isn't he volunteering? You can't fire a guy who's volunteering.
I think I saw a post that you had too.
Yeah, he's volunteering to save us money. The richest, most successful guy in America is volunteering to save us money, and you're screaming at him.
Oh my goodness. Well, it is really, we say this a lot, unprecedented times. And we know that in any situation we're in, God always provides his people with a way to prosper.
Absolutely.
And we talk about the scripture, the times of Issachar, just knowing, what to do at the right time. And so, Bill, when we look at the time that we're in, what are some things that you really would encourage us to take a look at and do during this window of opportunity?
Right. I would definitely seek God's presence and his voice and listen before you move. There's a balance, obviously, between taking action and prayer. You know, faith without works is dead. We know that.
Right.
But on the other hand, you got to seek the Spirit for guidance. Should I do this? Should I not? And listen for the opportunities. God presents opportunities all the time, and people who are broke just say, "Well, I'm just waiting for God to fulfill my needs." And are you looking? Are you listening? Did you see? Did you just trip over it?
Yeah. You think it's going to fall from the sky?
No, it's not. He expects, God helps those who help themselves. It doesn't say that really in the Bible, but that's an old expression, and it's true. You have to take action when it's time, and when the time comes and God says, now's time to take action, you better move or he's going to pass you over. I heard Jesse Duplantis say that God won't prosper people who won't take it. God is cheap. He's Jewish. He's not going to waste his money on those who don't take advantage of it.
That is so funny. And in that too, there is an element of risk with it. And so we do coaching together. We do real estate coaching. You and I in particular do vacation rental coaching as well. And in that coaching, we give as much information as possible. We guide people. We give them all of the tools. But the bottom line is, in many of our calls, that's what we say, Bill, is like, now to go forward with this, we've looked at the numbers, we've analyzed it, they've talked to you, they've got their legal ducks in a row. But what is the Lord telling you with this? Do you have peace, and is there presence on this to move forward? So I really appreciate you bringing that up. And we can't just go with that, because we do have to have the how-tos, and that's what Wealth Builders is all about. But I really like how you describe bringing them together.
Yeah. I've always been a kind of a shoot first, ask questions later, because, looking back on life, I regretted more the things I didn't do than the things I did that, didn't frankly work out. But you have to strike that balance between learning, praying, and doing.
Yeah, that's really good. And getting educated.
Yes. Yeah, because getting educated, what it does is it helps remove the risk. There's a high learning curve in real estate. Unlike the stock market, there appears to be no correlation between experience, education, and results. Otherwise, these fund managers would be making consistently 20%, after doing it 30 years. But in real estate, there's a high learning curve, but once you're over that learning curve, you don't make that many mistakes, unless you are foolish. So the idea is to shorten that learning curve.
Yes.
And get over that hump as quickly as you can and not make expensive mistakes.
Yeah, that's really good. And that's why we do these podcasts, and that's why we do the real estate workshops. As a matter of fact, we've got one coming up in April, and you don't want to miss it. It is a power-packed weekend. I believe it's April 25th to the 27th. I might be off a day there, but we'll clarify that in the lower third so you can see that. But that's where our entire team, we spend the whole weekend with you teaching and training on real estate, sort of like a fire hose. It helps you. What did they used to call that when you would get somewhere really fast? You'd move from that place of just trying to learn a little bit about it to just getting there quickly. I'm not thinking what the term is.
Beam me
there.
up, Scotty?
Yeah, something like that. Like, we want this fast. And the real estate workshop is one of those ways that you can literally get your learning curve shortened, because we're all experts. We're in the game, and we get that information to you so that when you leave that weekend, you are way further ahead than if you were going to try to study on your own. So you can go ahead and go to wealthbuilders.org/events and get registered for that. There is limited seating. So we just wanted to mention that to you. So that's one of the ways that we get educated. And Bill, what are you seeing in the market for opportunities right now for investors?
Well, again, since interest rates are going to stay high for a while, learning how to leverage people's existing mortgage, because still a good 60 to 65% of existing mortgages are under 4%.
And that, to me, when I hear that, it sounds so good, but to actually walk it out, I feel like I have a block there.
Yeah.
So how difficult is it?
It's not difficult when you know what you're doing.
There you
but
go.
That's the key. Learning how to do creative financing, things like lease with option and wraps and stuff like that, or seller financing, where you can leverage people's existing financing, and most of them are sitting on the sidelines. The interest rates are still high. Historically, they're not. 7% is not historically high.
That's true.
But compared to where it's been the last 10 or 15 years, yes. In the early 2000s, it was 7%. I still have properties I'm down about the last 3 or 4 years on that are 7.25%, 7.5%. That I got back in the late 90s, early 2000s. And it's gone up 5 times in value since then. Wow. But cash flow hasn't been tremendous because of those loans. But once they're paid off, it's going to be a cash cow.
Oh, yeah.
But real estate, they say you marry real estate, you date the interest rate. So you got to get in as soon as you can. It's not when you invest in real estate, it's how long you invest in real estate for.
Interesting.
So, people who look to say the perfect time, there is no perfect time. It's not the timing, it's how long the time you've been in. Because real estate, almost without exception, will increase in value in almost every neighborhood, some more than others, at least the pace of inflation, if not better. So get in. And if you don't like the interest rate now, interest rates will come down a little. I don't know if they're going to come back down to the 3s and 4s, but if you buy something at 7 or 7.5 now as an investor, and in a couple of years you can refinance it at 5, okay.
That really saves a lot and increases the cash flow. I think you really hit on something too, because in that appreciation, it seems like people look at prices today and they think, oh my gosh, it's just increased so much. It's so high. But that perspective is, well, it's just going to keep getting higher.
That's
so
right.
now's the time.
It's going to keep going up. I mean, if you look at real estate in the 70s, when market rates were the same, 7-8% interest, and people were just used to that. And if you bought a house then at those rates, by now you'd be a multimillionaire.
So true.
If you look forward to it. I mean, I remember in like the mid 90s, someone wrote a book called Stock Market 25,000, and I went, that's never happening.
Because it was so high.
It was so high. I mean, I think the stock market was probably 8 by then. And so that seemed so unbelievably preposterous. And now we're almost double that. So with real estate, it's hard to believe, but it's possible that in 15 years, real estate values could have doubled or tripled by then.
Oh, yeah. And we saw some of that just even in the last 5 years.
Yes.
Where it was
I would have swore to you pre-COVID, the market was over. It was dying. And then when COVID happened, it's over. And boy, was I wrong.
It just went the opposite direction.
I sold my old principal residence in 2019, and it went up 40% in the next 4 years.
Oh, my goodness.
I didn't know. I thought, this is it. I better get rid of it now.
Oh my goodness. And I think that has actually kept people stuck a bit. Because we visit with people, it is a little bit of sticker shock. But just understanding, studying history, and that's where this training, getting perspective, Billy says to write out at least 2 real estate cycles.
Yes.
And in that, the values may go down, they may go back up, but you just have to hang in there.
Hang in the long term. You know, it's funny. About 15 years ago or so, I met an old high school friend of mine in Vegas for lunch. And he's not too bright, but I remember he had bought some rental property on Long Island, New York, where I'm originally from, and we met. And he was telling me how he struggled and he struggled and he struggled. And then he said, and then the market went up and everything kind of worked itself out. And he just looked at me, he said, I think the game in real estate is just, if you could just ride out the bad times, the good times will take care of it. And I go, that's pretty good observation from someone who's a knucklehead. But it's true. It's true. It's about surviving the downs, because the ups are always so great in real estate.
I think too, initially, at least when I started thinking about real estate, when the market went down, I would back off like afraid. But actually, now, I know when the market goes down, that is the time to look at buying.
I got some of my best deals between 2009 and 2011. And it was tough. For a few years, I had negative cash flow. I had trouble turning over houses and selling them. But by 2014, the locomotive was leaving the station. And then by 2020, everything had doubled, tripled, and so have rents.
That's really good. And I think weathering things too, just when we visit with people, especially with vacation rentals, we just did a seminar on that. We're going to have a product that's coming out soon, so you want to watch for that. But we're encouraging people, don't get into vacation rentals if you don't have any cash reserve.
Yes.
Because when you go into something like that, there's a lot of startup costs. You're going to have months that are like this. And really, that's kind of good advice in a lot of real estate. If you've got a solid long-term rental, you don't have to be too concerned about that. But if you are in high appreciation markets where there's a little movement, if you've got a couple down months, just don't panic.
It's the same even in long-term rentals. I mean, you can have on paper positive cash flow, but as the bumper sticker famously says, bleep happens, and it happens in real estate. You might have 3 vacancies and a protracted eviction and an unexpected repair and a hail. I just had to replace roofs on multiple properties from a hailstorm recently we had. Insurance companies are not covering most of it anymore.
Really?
Yeah, they're not giving you a new roof. That they're saying is your roof is already 20 years old, so we'll give you the residual value of it.
Got it.
So I had to reach in my pocket close to 50 G's.
Wow.
Yeah. So it was a major, major expense, but that does happen in real estate. It's not that common. I don't want to scare people away from it, but you have to understand, going into any business, even on paper, if you think you're making money, the first couple of years, you got to have a reserve.
Yeah. That's so true. Also, I think one of the things that is a benefit of this long term that we're talking about, as far as just hanging on to real estate, is you talked about a property you have that is now worth 5 times more than what it was, and all of that appreciation is tax deferred unless you sell it.
That's right. And just to give you one example, I had a property that I bought in the mid-90s. When my daughter went to college, I just refinanced it, took out tax-free money, because refinance money is not taxable.
Very good point.
And paid for 4 years of college. And my tenants are paying it back.
Oh, that is awesome.
Yeah, that's better than a student loan. It's better than any college savings program.
And that's the thing where those are strategies that we cover with people and talk to them about. And the taxes, we just signed off on our returns and from 2023, actually, but we were looking at it, and I was just reviewing things and looking at our income, and we actually got money back. And I was like, how did this happen? And then I started looking at my schedules with the real estate. And with that, between depreciation and the money that we put in, which actually is adding to the value, it lowered so much of our tax liability. It was incredible.
It's absolutely. But then there's the conundrum in being an entrepreneur. How do you look broke to the IRS and rich to a bank to get a loan?
I know, but we help you with that too. Navigate figuring that out.
That's right. So, real estate is always been the proven money maker as long as you limit your downside risk. And you have either the cash flow, a separate source of income, a line of credit, a partner that could feed the alligator when it's hungry. Because real estate, will provide positive cash flow most of the time, especially short-term rentals. But bleep happens, If we remember during COVID, the short-term rental business just plummeted because nobody was traveling. And so what are you going to do? Can you turn it into a medium-term rental, an executive rental, a long-term rental, or can you ride out the storm?
That's really good. And what was interesting about that time period is once people started to feel like, I just can't be sitting in my house anymore, they started driving and renting short-term rentals because a lot of the hotels were closed just to get out. And the executive rental, a time period, that's a great example, Bill, of a time where, hey, everything was looking down, but there's always a way. And so people would say, I'm going to go to Florida for a month and I'm going to work remote from there to get me out of my house.
So I don't have to wear a mask.
I don't have to wear a mask. So it's really interesting. Then out of that came just like really quite a boom in real estate.
And also I know a lot of investors who snapped up properties from other people who were suffering during that time. So for every problem, there's an opportunity. It also exists. So if the market is problematic, then you find people who are motivated and you buy more because it always turns around.
It really does. We only have a couple minutes left. So I would just ask Bill, what is like the one piece of advice that you would give people getting into real estate or growing their real estate portfolio, given all these things that we've talked about that are happening right now?
2 things. One is get educated. The more you learn, the more you earn. And the more you reduce your risk, the more confident you have moving forward. And with that, take massive amounts of action. Because if all you do is study real estate and watch videos online and read books, you're just a boring person on a real estate chat group. Good. Or a cocktail party or whatever. So you got to be a doer. But at the same time, if you don't learn first and you go crazy, then you're dangerous. So, it's not all DIY. It's not as simple as it looks on the TV shows.
That's for sure.
They edit out a lot of the heartache and things, that you don't see. But if you take the time to learn your market, learn the strategies, learn the risks, and learn how to mitigate it, there'll be nothing that is risk-free. Real estate, always, like any business, has risks, but you have to learn to just minimize your risk by getting educated and then hit it.
That's so good. And great timing on this with the real estate workshop that is coming up in April. Again, go to wealthbuilders.org/events and get registered. Also, take advantage of this free PDF download of Billy's booklet called Financial Breakthrough, Embracing God's Plan for Abundance. And you can get a hold of this at wealthbuilders.org/break-3. through. So Bill, thanks so much for being on this podcast, and we're going to be doing another one here, so you're going to see more of Bill. And thanks all of you for tuning in and for being part of the Wealth Builders family. God bless and have a great rest of your day.